Hi everyone, thank you so much for tuning in. Today we're going to be looking at placing a live trade in the China ETF of FXI. Welcome back to all of our subscribers, and if this is your first time here, my name is Kirk with Tactical Options Trading, and we make videos just like this on a consistent basis where we talk about the stock market and options trading and all things ThinkorSwim. We actually put live trades on here, so if you're interested in learning more, I hope you'll click this button right up here and subscribe to our channel. We love making videos like this, and we hope that you find them useful. So guys, let's get right into it. We're looking at placing a trade in FXI. Now we're looking at placing an iron butterfly trade. And what we like to do here at Tactical Options Trading is sell options. And we like to sell those options when implied volatility is really high, because that's when that allows us to receive or get the most credit for selling those spreads. So let's take a look at what the implied volatility ranking is right now. So right now, FXI is currently trading at 67.6 implied volatility ranking. So what that really means is over the last year, as we look back at FXI, implied volatility has been less than it is right now, 67% of the time. So let's take a look at the implied volatility ranking, and we can see where it's been and where we are now. So what this shows us here is this implied volatility ranking has been climbing, dropped a little bit, and then today we had a little bit of a gap down, which caused the IV ranking to jump up, or the implied volatility to jump up. So that maybe presents a little bit of a trade opportunity for us to look at selling some credit spreads, some credit spreads around this higher implied volatility. So let's take a look at the trade tab here in FXI, and we're gonna build out an iron butterfly, and we're gonna see what kind of a credit we can receive for selling that iron butterfly. Now, if you're not familiar with an iron butterfly, really it's just an iron condor, but when you sell those two credit spreads, because an iron butterfly basically is a call credit spread and a put credit spread put together, and they share those same common strike prices there at the middle strike. So let's take a look at the trade tab, and we're going to look at coming into the 21 December series. And now in doing this, guys, again, I don't want to recommend you make this trade. I'm only showing you this trade so that you can get an idea of how to place an iron butterfly when you decide, if you ever decide to make an iron butterfly trade. So again, we're looking at the 21 December series in FXI. Currently, FXI is trading at about $39.88. So what we want to do is come in and sell the at the money call and the at the money put strikes and build out this iron butterfly. So the closest call and put strike to the 39 would be actually the 40 strikes. So we're going to come down here to the 40. We're going to go ahead and click on the bid, and then on the call side we're going to do the same. We'll come right over here to the call side, and now when in ThinkorSwim, if you hold down that control key and click the bid, it will actually populate both of those positions in there. Now, if you were just to come over to the call side and just click the call or click the bid, it would kick out that put position that you'd already just put in there. So hold down that control key, and you'll be able to put both of those in there. Now, if we just left it like this and we just sold the call and sold the put at the 40 strike, what we have here is a straddle. And you can't see it there, but this is a straddle, and it'll actually populate that into the window there. So we don't want to sell a naked straddle, not all the time, but you know, if we can buy some protective puts and calls for cheap, we'll come out on the put and the call side, and we'll look at buying some protection. So let's come out here on the put side, and we're going to be looking at selling or buying a 34 put. You can see that we have some, you know, those puts there are selling pretty cheap. So again, we'll hold down that control key, we'll click the ask, and that's going to populate that down there. And then we're going to come down here on the call side, and we're going to go ahead and look at buying that 45 call. So we're going to get that for 10 cents. So you can see that this whole trade here is set up as we're selling the 40 strikes. Right in here we got the 40 strikes. And then we're going to be looking at buying the 45 call in case this stock really shoots upward. We have that 45 call working for us to help us to offset any loss. And then on the downside, we have that 34 put that's going to be building money if the stock decides to go lower. So building this out, we're looking at a 40.45 and a 40.34 call and put iron butterfly. So right now this whole trade is trading for $2.74 or $274 with one contract. So let's come in here and we're going to click confirm and send, and we're going to see what kind of profit loss scenario we have here. So our maximum amount of profit again will be $274, and that's populated right in here, $274. Now our max loss would be the difference of how wide those strikes are, less the credit that we received of $274. So that would be $326 max loss, not including commissions, of course. And you add those commissions in there to figure out your, narrow it down to your total profit and loss. But commissions, if they're not that much, it's no big deal. So anyway, we're looking at a $274 profit and then max loss of $326. Now, what we like to do here is we like to buy these spreads back at about 25% of max profit. So once this order is received, we'll go ahead and we'll set up a order to buy back this spread at 25% of the max profit received. So let's go ahead and click send on this, and we'll see if we can get filled on this order. Now what I like to do is just double check and make sure that everything looks good. So we're going to be selling the December series, the 40.45, 40.34 call put at $2.74 to open, and we're going to go ahead and click send, and we'll see if we can get ourselves filled here on this order. So go ahead and click send, and waiting for that order to get filled. You can see our orders are just sitting here waiting to get filled, and we'll see how we'll just sit here and talk for a few minutes and see if we can get those orders filled in. So guys, I hope you guys have found this video helpful in understanding calls and puts and understanding how they go together to build this iron butterfly. Let's come back over here and look at the chart. We'll just kind of dissect this a little bit and see if we can get that order filled. So really what we're doing here, and I want to let's come back over here to this trade. Let me come in here to our monitor tab, working orders. We'll come in here and we'll go analyze trade. So we're going to analyze this trade here that we have sitting here waiting to get put on. Now you can see that the strike prices on both sides is not exactly the same, because on that call side we didn't have to go out as far to buy protection because those calls were selling for a lot less. But now on that put side we had to step it out a little bit more. So we're sitting down about a $6 wide strike on this side, and then on the call side we're only about a $4 wide strike. So we're looking at seeing where our break-even points are and how much credit we're taking in. I've already kind of done this, but I just want to show you guys what I look at when we're making these trades. So let's come in here. We're going to go set slices to break even on December 22nd. You can see that it's moved our break-even points in here on these. And now if we come in here on the chart, we can actually put those on the chart. And I've done this on some other videos, but this is like how I like to analyze these trades. So we're going to come in here, we're going to go set slices to chart, and you can see that it's going to put those lines on the chart there. So what we're looking at is we want this stock to remain inside these lines. These are our break-even points before that December expiration. So let's go ahead and put the December expiration lines on the chart here, and you can see where those lines come out. So here's our November expiration right here, this red dotted line. Our December expirations clear out here. So really all we need this stock to do, or this ETF to do, is just be inside these lines, and actually we don't even need it to be in there all the way till expiration, because we're looking at taking this trade off about 25% of max profit. So even if this ETF were to trade up here outside and then right before expiration come back in because of that market cyclicality, we could still become profitable. All we're looking for is 25% of this iron butterfly for our trade to work out. So this stock has all this room right in here to move before our December expiration right here. So that's all we're looking for. I love making these trades and I love selling it when implied volatility is really high, because usually implied volatility is overstated. Most of the time, stocks don't move as high as people think they are going to or hope they're going to. Usually they don't fall as far as people think they will. So that implied volatility is our edge in trading, because we have, the implied volatility is so high, but the stock doesn't actually move as much as people think. So we can actually collect a lot of premium when selling these options. So again, we're just looking for this stock to stay in a range in here. And these break-even points, the way we figure those basically is we just take that at the money strike and then take the credit that we received and add it to the call side or add it to the upside and then minus it to the downside, and that gives us what our break-even points are here on the chart. So guys, I hope this has been helpful to you. Sitting here waiting for our trade to get filled. It hasn't been filled yet. We're still sitting there waiting for it. It's trading right now at $2.73, but we have it sitting right here at $2.74. So we're just going to let that work here for a little bit. We'll see if we can get that filled. But I hope this video has been helpful for you guys. Appreciate you guys joining us and jumping in on these videos. I love making them. I hope they're helpful. If you have any comments on anything that we've done in these videos, or if you have any questions about the iron butterfly and how you place those trades and more of what we look at, place them in the comment section below. We'd love to answer for you whatever we can. Again, my name is Kirk with Tactical Options Trading. If you guys think this video has been helpful and somebody else could benefit from it, go ahead and share it. We'd love for you to share it with anybody that you think could benefit from this video. If it's been helpful for you, give it a thumbs up and a like, and subscribe. Again, Kirk with Tactical Options Trading. Have a good one, everybody. Catch you later. Bye-bye.